Elon Musk, the CEO of Tesla, realized he had to change things at Twitter to allow free expression. That was accomplished by his hostile but generous $54.40 bid for Twitter. Many say investors on Twitter would be profiting from a company that is losing money and plagued by phony users. Elon Musk now has more influence over the social media platform that he may use to engage with his supporters. On April 25th, the board of directors of Twitter approved Musk's $44 billion offer, paving the path for the billionaire to purchase the company and take it private. How will this impact Tesla stock? Will the stock price go up or down? Make sure to stick to the end to find out. According to insiders, Elon Musk is poised to take over as CEO of Twitter, at least temporarily, after his purchase of the social media giant. Tesla shares fell about 7% as a result of the news, owing to Musk's devotion to Twitter, which could become a distraction from his already hectic schedule as CEO of the electric automaker and aerospace company SpaceX. Many are skeptical about the CEO's purchase of the social media platform, claiming that Musk's shakeup of the board of directors and management, as well as the re-evaluation of CEO pay rates, could jeopardize Twitter's business model. Already, the amount of time spent on social media is dwindling. Facebook, Instagram, and Snap are all vying for the same amount of user attention. As a result, Tesla's CEO may have to choose which firm to concentrate on. This raises the stakes for Tesla stockholders. For months, the back and forth between Musk and Twitter has been wildly known. Now that a deal is in the works, investors will be paying closer attention to how Musk's purchase might affect their portfolios. The implications are especially serious for Twitter shareholders and users. Elon Musk, a billionaire, made a $44 billion offer for Twitter, which the social media business accepted. If the deal goes through, investors in the social media and tech sectors will be faced with a drastically different landscape. Twitter will become a private corporation, which means that financial and operational openness will be severely reduced. Musk also hinted that significant changes to the user experience could be on the way. The billionaire, who has 83 million Twitter followers and has romped across the network, throwing insults and jokes, has declared numerous times that he wants to transform the platform by encouraging more free speech and giving users more control over what they see. By taking the company private, Musk could work on the service away from the prying eyes of investors, regulators, and others. Twitter stockholders will receive $54.20 in cash for each share of Twitter stock that they own, if and when the transaction is completed. This means a cash infusion for shareholders, particularly those with a large number of shares. However, the most important considerations are whether and when the acquisition will be completed. The sale has been approved by Twitter's board of directors, and the company has entered into a definitive agreement to be acquired by an entity wholly owned by Musk. However, the transaction is not yet complete. The purchase must be approved by Twitter's shareholders at the company's next annual meeting. Finally, regulatory approval and other closing conditions must be met. The acquisition is expected to finalize later this year, according to Twitter. Tesla shares dropped after the agreement was disclosed on Monday, indicating market skepticism as to how much time Musk will commit to Twitter after his takeover is complete. According to Zoe Gillespie, an investment manager at Bruin Dolphin, the dip in Tesla share prices reflects investors' concerns about Musk's diluted presence at the electric vehicle company. She said, "I believe investors are wondering whether Tesla board's depth will be brought into Twitter. Whether it's just a short-term issue until the lay of the land is determined, the market hasn't regarded it favorably. We believe this is because there's concerns about whether the deal will influence senior Tesla executives as well." Analysts appear to sympathize with Tesla stockholders who fear the Twitter deal is tarnishing the company's name. According to Wedbush analyst Dan Ives, the deal, which would boost Musk's collateral to debt ratio, is far overdone. According to Mike Rhodes, CEO and founder of London-based consultancy business Consult My App, the Twitter deal could appear to be a bridge too far for Musk. In a recent interview with Fortune, he said, "The projects he's working on at Tesla and SpaceX can hardly be described as unambitious duties, requiring little more than passive administration. One can only suppose that some of the earlier vitality he infused into those enterprises will be lost in the process as he embarks on yet another arduous trip." According to Rhodes, if Musk chooses to focus more on his new venture, Tesla and SpaceX may lose some of Musk's pizzazz, which could lead to lower performance or falling stock prices. Is the value of Tesla's stock really in jeopardy? Recently, Tesla's stock was trading roughly 9% down. Elon Musk sold about $8.5 billion worth of Tesla shares in 3 days after the announcement of a deal to buy Twitter. According to Kevin Kaiser, a finance expert at the University of Pennsylvania's Wharton School, Musk's stock sale suggests the Twitter acquisition is more likely to close because it shows Musk wants to come up with the cash. We believe Musk is being prudent by selling shares now rather than when the acquisition is expected to finish. According to Kaiser, it makes sense to sell shares before people expect it to happen so that his selling does not place unusual short-term downward pressure on the price. Surprisingly, the disclosure of Musk's sale documents during the last 2 days has had little impact on Tesla's stock performance on Wall Street. Despite being down nearly 12% for the week recently, shares were up over 3.4% at the time of writing, trading at roughly $907.50 in New York. While Musk's purchase of Twitter is a great deal for Twitter's present shareholders, it enhances the risk for Tesla stockholders, according to Richard Windsor, founder of research company Radio Free Mobile. He said there might be some management roles, but frankly, if you look at Tesla and what he's likely to do with Twitter, Windsor doesn't think there's going to be too much of an issue. However, Windsor, who claimed to be the last person to suggest that Tesla is appropriately valued, told Fortune that if Tesla's legendary CEO was less involved in the firm, share values could stabilize. According to experts, Musk is also incurring a fair bit of danger by using Tesla shares as collateral. Even if his 2018 pay arrangement allows him to exercise options priced at just $70 a pop, and he is, on paper, the world's wealthiest person, if the electric vehicle maker's shares unexpectedly fall, that might cause a lot of discomforts. Windsor agreed that it was critical to remember that Musk used a portion of his Tesla shares to arrange funding for the purchase of Twitter, and that tying Tesla stock to the transaction posed a new risk for Tesla stock prices. According to Susanna Streeter, a senior financial and markets analyst at Hargreaves Lansdowne, Musk faces tedious and time-consuming work at Twitter in the months and years ahead, with governmental crackdowns on big tech and preserving revenue likely requiring his focus. She continued saying, however, given that Musk has repeatedly avoided blows aimed at his perceived overambition, whatever impediments are thrown at him, he's sure to emerge bruised but in fighting form. Musk appears to want a lot of say in how the company operates, which might place him under time constraints. Kathy Wood of ARK Invest is quite optimistic about his purchase of the social media platform and seems to believe that establishing a balance is not beyond him. Instead, he infers that Elon's acquisition will be beneficial to Tesla. According to Endpoint Technologies Associates analyst Roger Kay, Tesla's stock price is unlikely to be harmed in the long run and could soon return to its previous level. According to the financial expert, Twitter is a fascinating challenge because it's also a well-established firm. Kay claims that it's not so much about turning it into a successful platform because it's already proven to be one. He's just utilizing Twitter as a platform. Analysts are trying to figure out where Tesla's long-term prospects point because of the deal. However, Musk is well known for his intense work ethic, which includes sleeping at Tesla's production facilities and working alongside associates on assembly lines. While Tesla and SpaceX had some of their busiest years in history, on the matter of becoming Twitter's CEO, it appears like Musk may be overburdening himself if he accepts new responsibilities at Twitter. However, Musk's ultimate role as interim CEO remains to be seen. We believe the performance of Tesla stock is highly dependent on how Musk handles the entire situation and if he effectively balances all the roles he has. How do you think Musk's purchase of Twitter will affect Tesla stock? Comment down below.